while some online bullion dealers continue to charge almost $2 over spot for 1 ounce silver rounds, SD Bullion is selling 1 ounce silver rounds at only 49 cents over spot on any quantity. Again, that's $9.99 fine silver for just 49 cents over spot for any quantity. If you haven't joined the over 40,000 precious metals investors by making the switch to SD Bullion, what are you waiting for? You could save hundreds or even thousands of dollars on your next order. SD Bullion, the lowest prices, period.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, we've had a big day in gold and silver here today. Really began, Eric, at 8:30 this morning with a big miss in the jobs report. May only saw 138,000 jobs, and also April numbers were revised down, about 40,000. So just really bad job numbers today has the market suddenly wondering if the Fed might not hike rates this month. We can get to that later. I think they probably still will, but that's just a guess. But in the wake, gold and silver have rallied pretty strongly. Silver's up about 30 to 40 cents from that news, trading right around 1760 here as we record late in access market trading. Gold's also up over $10, and it's trying to make a late access session charge here at 1280, but it's definitely going to close the day above 1275 here. Pretty nice action here to close out the week and to start the summer here.
Indeed, yeah, and the U.S. dollar is also tanking too. It is now a low for this whole year, and probably will close actually in terms of the U.S. dollar index, the DXY, on the low for the day. I mean, it's not catching any kind of support at all so far. And, yeah, I mean, yesterday we had whisper numbers about the unemployment numbers coming in pretty much as they did, yet gold and silver were whacked following the previous day's gold move where gold got over the 1260s, and people were looking at that and taking that as a sign that this period of this year, despite all of the really tough trading that precious metals have undergone, gold has actually been seeing higher lows and fighting through all of this concern about what's going on in the markets and the Fed normalizing its balance sheet. And gold's been hanging in there. And as soon as we saw yet again another upside technical signal that would get the people who trade on COMEX in particular, and in fact that the leap over into the 1270 plus range for gold was in fact on the COMEX 2 days ago. And lo and behold, it was beaten down yesterday, even though the whisper numbers were that the employment numbers were going to suck today when they were released. Welcome to managed markets where psychology is moved around the edges. And today, gold is now at 1277, up about $12. So we're hitting 1750 and change higher. This bull market has never been in peril of dying. We've been talking about that all year, even though there's been cat calls from everyone and their dog about how the precious metals are going to roll over. The Fed probably will raise on the 14th, I believe, is the 13th and 14th is a 2-day meeting this month, and on the 14th they announced the FOMC comes out and they've been talking about raising rates so much that they kind of back themselves into a corner when they do this, and they basically have to raise. But then, the markets overall, like when you look at the standard equities market today, it's blasting higher because general traders, as well as the computer algorithms and the automated systems and so forth, are looking at the employment number and concluding that the forward trajectory of normalization of the Fed's balance sheet is going to slow down a lot, regardless of the fact that the Fed's going to raise interest rates, or most likely raise interest rates on the 14th. So, people and computer-based systems are concluding that liquidity is in the punch bowl for the equity market's going to still be there supporting assets until the cows come home. And this is perpetuating the distortions in the markets. We have real economic slowdown that's visible everywhere. And the only set of data that's been reasonably strong in giving hope to people have included things like the unemployment numbers, as bastardized as they are. I actually think it probably wouldn't be too far of a stretch to imagine that the people in the Bureau of Labor Statistics that compile the employment numbers, I mean, we know that the numbers are politicized. It's already been proven in many particular anecdotal cases before elections and in months where, the data is just so ass backwards that statistically it's obvious they're manipulating. Who knows? Maybe they purposefully wanted to paint a picture that would enable the Fed after this month to cool their jets and not raise interest rates, because if interest rates go up substantially, that's going to hurt the stock market and hurt bank balance sheets as asset prices fall and as the overall economy stalls, and if we have higher interest rates being pressured by the Fed raising interest rates, that can add to the budget deficit. I mean, we have record low interest rates created by the biggest bond market bubble in world history when, the aftermath of the 2009 crash had central bankers all over the world creating gigantic amounts of liquidity, and they've basically socialized all of those losses, prevented a Great Depression from happening, but now they've got these balance sheets that are so damn big, they can't fix this problem. The Fed's over, something like, I don't remember what it is exactly, like $4.4 trillion or so now in their balance sheet. The ECB just passed the Fed in terms of the size of their balance sheet in dollar terms. I mean, this is a huge mess.
Yeah, it certainly isn't getting any smaller by the day either, is it?
No, and they have been treating us to a nonstop propaganda campaign about their ability to normalize interest rates, going all the way back to 2010, Bernanke talking of green shoots in the economy. I mean, how long is it before people just, completely give up on the credibility of the Fed entirely? I mean, at some point this is going to happen, and it's probably going to happen only after the next major market crash where people just look around and say, okay, this whole cycle of creating bigger bubbles to fix previously busted bubbles is completely insane. The model that, in particular, Greenspan has ushered in since the 1987 crash is what we've been living with. And then each crash gets bigger and bigger, and we're going to see another crash. The valuations in the stock market are now massive. They're way out of whack from economic fundamentals, and the stock market keeps going up, even though we have the economy rolling over and corporate profits, though they blipped a tiny bit higher in the first quarter. All things considered, the valuations in the stock market are ridiculous. And if you look at retail sales, they're falling down. If you look at the signs in the housing market, in not just the United States but in other places too, that's under pressure. The auto sector, which has been a segment of growth in the U.S., as odd as that has been, is now fallen over because of the excess credit that's going into that market. I mean, everything's been driven by credit, and there are signs that ability to issue more and more credit to tapped-out borrowers is just not here anymore. People are too tapped out. That's part of the reason why we've actually seen the North American bullion market for sovereign coins, silver and gold, somewhat weak, because the people who care about protecting themselves have already mostly done so, and they're sitting with the prices lackadaisical as they are. And there hasn't been a sufficient catalyst to bring out new people into the markets yet. And that's going to come. We've been talking about this all year. I've been talking about this last year as well. The stock market is going to roll over. And if the Fed raises interest rates on the 14th and then, signals that, we're going to be economic dependent, and data dependent is Yellen's old favorite phrase. I have a feeling they're going to resurrect that stupid phrase and pull it out. And that's where the press conference will be signaling on the 14th of this month. But as we move into the fall, as we continue with this insane political backdrop in the United States of partisanship beyond anything I've ever seen in my entire life, and with the probability of, even outright impeachment charges against Trump launched, and the dollar rolling over, reflecting the lousy confidence that erosion instills. I mean, this is all a scenario for much, much higher precious metals prices, and we're going to see that over the summer, and we're not going to have the summer doldrums.
Yeah, it certainly looks to me as well like it's setting up for a pretty nice summer. I'm waiting to see another June like we had last year. That was pretty amazing last year. I think was silver up $4 or $5 in June last year and it started under 16 and it ended. Well, I guess if you include the July 2nd or July 3rd Sunday night when the market opened and silver jumped up another couple bucks, it was fireworks.
Yeah, and we've been talking, too, about how we've seen this pattern of metals actually rising after an FOMC hike, counter to what people would expect. It's going to happen again. And then on top of that, we're going to have expectations seeded into the market where the belief that the Fed will normalize interest rates faster rather than slower per what they've been trying to make people believe is just going to go out the window. If we do see a rate hike in June, I believe we will not see another hike this year.
Let's change gears a little bit here, Eric, and talk about the big story of the day and really of the week in precious metals markets, and that's after 2 years of charges and investigation into the alleged manipulation by Deutsche Bank into manipulating the precious metals markets. The Deutsche Bank trader, David Liu, has pled guilty in federal court in Chicago to conspiring to spoof gold, silver, as well as platinum and palladium futures. Basically between 2009 and 2012, that he, along with other traders, but he's the one who's pled guilty now, basically spoofed precious metals contracts. And as Eric and I were discussing before the show, it's definitely different than really what the bulk of manipulation is. It's just dumping futures contracts onto the market. It's supplying paper into price rallies to soak up sentiment and soak up all the new demand. So, Eric, let's explain to the listeners a little bit about the difference of this spoofing charge versus that. Spoofing basically is having your system show or letting all the other computers and algos see a massive order that you have set at a certain price. So all the other algos and all the other computers see that, and then it's withdrawn before the trade is actually executed, so that they don't actually intend to execute those trades and dump those paper contracts. Spoofing the market is showing, say silver's trading at $17.50 right now, so I put in a massive sell order at $17.52 or $17.48, and then I withdraw it before I can actually be filled, because I really don't want to sell 5 million ounces of silver right here. I just want to tip the market over and send it down.
Yeah. And then it changes the psychology when the rest of the traders see that big order, 5 cents or whatever above the spot, or not the spot, but the whatever contract that we're speaking of for a month or whatever, and it's not going to execute because the price is above where the prevailing contract's trading. So the spoof trader is safe, but still engenders absolute fear in the marketplace given the size of the order that's put in, and that's how they quote unquote paint the tape by making psychology shift. But the thing is that the vast majority of heavy lifting when it comes to manipulating on the COMEX in particular, but even in the LBMA, it's basically the bullion banks on a monthly basis being able to short into rising demand with new contract issuance on the short side to match up against the flow of paper traders that want to get long price exposure. So they absorb that long price exposure as opposed to those paper traders having to fight over existing contracts and by definition push those contracts up because the supply of the contracts is smaller. It's a zero-sum game in these futures markets, and if you're going to buy something, you have to have something to buy. And if the bullion banks are issuing a lot more short contracts because they want to create those securities, they can do that till the cows come home. And in a monthly period, in a 30-day cycle, they're able to do these issuances, and then if they keep doing it, and then eventually you have some kind of a catalyst where they'll push enough paper into the market or have some other instance where the markets fall down from some other catalyst, like if they're attacking miners or whatever, which they have done, the longs eventually give up the ghost and the momentum shifts, and then the bullion banks are able to cover their shorts at a lower price. And that's how this game works. A lot of people in the pundit and analyst community in the precious metals space refer to this as the wash, rinse, repeat cycle, and that's what we see. I would, educated guesstimation say that we're talking maybe 85-90% of the mechanics that go into creating this price suppression BS is in fact what I just described. It's not spoofing. And you and I, the very day this Deutsche Bank story broke, what is it now, almost 2 years ago, it was when we were recording a show, the SD Weekly Metals and Markets Wrap, and we were talking about how it was very likely that people are going to make a bigger deal out of this Deutsche Bank revelation in the ongoing case than is warranted, because they were going to attempt to try to make, limited hangout in terms of showing, yes, manipulation, but not revealing the true scope of manipulation. And I contend that spoofing, in the grand scheme of things, is actually a really small tool within the overall toolkit that the cartel has been using to beat the crap out of precious metals. And, it's good that we know more about the collusion and this latest revelation based on this guy sitting and singing and spilling his beans is a good thing. We know more, and hopefully there will, in fact, be further cases that develop out of this, which is what people are speculating is going to happen, and that probably will be the case. But we need to be pretty sober about this, particularly the people in the precious metals community, and not, go over the top and celebrate just the simple fact that we can turn to everyone and their dog that's been saying manipulation hasn't been happening. Well, big deal. We've known this for 2 years now, that Deutsche Bank was admitting to wrongdoing and that they were going through the process of settlement, and we already have the luxury of being able to turn to the miscreants that have been saying precious metals manipulation doesn't exist and say to them, grow a pair. Take a look at the fact that Deutsche Bank already admitted wrongdoing in court. But that doesn't solve the problems that we face when it comes to the destruction of price discovery, and the manipulation is going to continue on. We have the short-selling wash, rinse, repeat cycle. We have central bank deposits and treasury and other, sovereign gold holdings that have been leased out into the marketplace multiple times with this gold, though it may be, in fact, in Fort Knox and in the New York Depository and in the Fed and et cetera. These holdings, as can be proven by, the inability for the Fed to return gold to Germany as but one example in a reasonable period of time, these holdings have been hypothecated to the moon. There are multiple claims on these stupid, claims that our governments are trying to tell the marketplace for the sake of preserving confidence in the underlying hard asset that is the backstop to our financial system when confidence in currencies go up in smoke. We have a gigantic scandal. This isn't just, some dumb bozo following marching orders from Deutsche Bank to do spoofing to try to make a few extra bucks manipulating the market. No. This is a systemic, system-wide manipulation that's being executed in pursuit of preserving the entire fiat paradigm of the global financial system led by the Western financial markets. And that's not an understatement. And the kind of manipulation that's going on is huge.
And David Liu is not the mastermind.
Yeah, right. I mean, take a look at that guy. He's smiling like he just ate a canary or something. Yeah. Some person out in a trading desk in Singapore.
An intern in Singapore.
Right, yeah. Come on. So, my message to the precious metals community is don't go patting ourselves on the back and getting all jubilant about, oh, yeah, we can now talk to the mainstream media and say, see, told you so, you morons. This story's bigger than that. And unfortunately, this looks like it's It's falling along the lines of what you and I have been talking about for a couple of years now. And forgive me, I don't remember exactly when the Deutsche Bank story broke. I think it was like 18 months ago, the very first whiff of what was going on. And from that very first moment through today, I've maintained that they're going to try to make this go away. Yeah, Deutsche Bank may have to pay a heck of a lot more in fines, but that's a slap on the wrist. It's a cost of doing business.
Yeah, I mean, and even when it's not just the scapegoat, if you think back to, I can even forget the year now, was it 2012, 2013 when the London whale incident went down? And I mean, we're talking the head of the risk desk was involved, and there wasn't any jail time. There wasn't any pleading guilty in criminal court. It was just
or look at,
it was a slap on the wrist, and
look at LIBOR.
I mean, for any small company, I mean, $8 or $9 billion is not just a slap on the wrist. But when you made $20 billion doing that crime, hey, it's cost doing business.
If you cheated on your taxes to the tune of $50,000, the IRS would be like on you like white on rice.
Yeah, they wouldn't fine you for $25,000. You'd be in jail, and you'd be fined $50,000 plus 10% interest, plus penalties.
Yeah, right. And your firstborn.
Exactly.
So that's where we are when it comes to our managed markets. I mean, everything we have an economic policy that basically boils down to what can be the best propaganda to put out into the marketplace to talk about spoofing. I mean, spoofing the minds of the public. That's really what we have is economic policy. It's all management of perspective economics, as Jim Sinclair likes to joke about.
Yeah.
But on a brighter note, gold busting through once again that 1270 level, and the summer doldrums not looking like we're going to be, seeing that in our forefront. And then, other developments with China still having really strong demand. I mean, India might be slightly less robust given taxes that they're going to put in place and their continuing war on gold. But all things considered, we have the backdrop of global demand being very strong, regardless of, the North American coin market being somewhat weak. And the economy rolling over, the stock market at valuations that are just ridiculous. We have the bond market hitting new yield level lows for this year in the longer duration bonds for the United States Treasury bonds. That's not a scenario where the economy is doing well. The stock market is so ridiculous in its counter trend move to object reality that when it rolls over, and it will roll over, people are going to flood into alternative assets, and gold and silver are going to get a pretty strong bid. And the fact that they've actually done reasonably well, all things considered this year, given what has been thrown at them, given the propaganda war as well from the Fed about interest rate normalization, and that just taking a back seat after this rate hike that they do in June, we're going to see a lot higher precious metals prices this year. And the summer doldrums is not going to happen.
Do you think to get us going, Eric, it's going to be more of that fear trade rather than the greed trade? I mean, really, if you look back over the last decade and a half, there hasn't really been any greed trade in precious metals outside of maybe 2 months in 2011, maybe about, really probably about April. March and April of 2011 were about it that you saw people getting excited and piling in out of a greed factor. I mean, outside of that...
That's a great point, because... more often than not, we have been propelled higher more because of fear and people wanting the insurance of, like a deflationary crash that gold can provide, at least the people who understand that. And there are many people who don't understand that. If we start seeing if we see the standard equity markets roll over, we certainly will see a lot of people saying, well, what's the most depressed asset that hasn't participated in the crazy bubblicious kind of environment that we've been living under, and they'll look towards precious metals. And the Western markets certainly chase momentum. I mean, when we shot up to 19, 20, 21 or so gold at the peak on a nominal basis a couple of years back, that momentum was indeed, like you say, greed-driven too. It wasn't just people wanting to hedge. It's like people watching Bitcoin and all the other cryptocurrencies in the last 2 months go berserk, and people who've never even known how to spell Bitcoin, are now coming out into the market trying to figure out how to get some of this stuff. So we'll see momentum move in on greed basis too.
And I mean, everybody everywhere that I read anyways, is saying that Bitcoin and all the other cryptocurrencies are going exponential because of fear of fiat currencies, and I don't buy it. I think it's just straight out the greed factor. It's straight out. It's straight out. I agree. Giffen's good. It's going up, and I see it going up. It's going up. It's going up. So I'm going to buy it and chase it. I mean, I might be wrong, but I mean, if there was truly a fiat currency fear that was causing the cryptos to go up, you would see a much bigger. If it was truly a fear move, we'd be having a lot bigger problems with the physical markets, that the bullion banks would be trying to cap it, and they'd be having a lot bigger problems with the physical markets with inventory problems. And I don't see that at the moment. So I think
that's a great point.
I think it's mostly just a straight out greed trade right now. People see it going up, and hey, it doubled last month. It's going up again, so I'm missing the boat. But I mean, you step back and you look at a 10-year chart, even if I don't know, I guess I'm old school here. I mean, when something looks like a rhino horn going exponential, it's not the time to buy it.
Right, yeah. It's a little bit of both. I mean, maybe just for the sake of conversation purposes only, you'd call it 10% based on people who want to have their money's outside of the financial system. They recognize how insane things are going. They see the momentum, in fact, of the other 90% that are pushing Bitcoin up, so they'll jump in. And, there's definitely some of the longer-term, more aware people that are following cryptocurrencies precisely for good reasons of wanting to be out of the system and whatnot, participating in this. But the vast majority of this move has been built on just, the people chasing momentum, and a lot of people, in fact, coming to the market for the very first time. I mean, the number of people that have said, "Hey, Eric, do you know how to trade this Bitcoin stuff?" I'm getting that kind of question all over the place. And it reminds me a lot, actually, of like how it was in late 1998, early 1999, how in the NASDAQ bubble, I mean, you'd go to any bar, and then instead of sports news on TV, there'd be, CNBC and people all over the place talking about their latest tech stock buys and whatnot. I mean, it has that kind of feel to it. Very few people are ultimately in Bitcoin and all the other cryptos. I mean, we're talking about roughly $50 billion of total so-called market capitalization, the price of the coin times number of coins out there in the market being about $50 billion. In the grand scheme of things, that's like a fly speck in terms of, even in comparison to gold market alone, never mind entire financial flows. So it doesn't take a lot of people, is my point, to make the Bitcoin market go and all the other cryptos go absolutely bonkers. And that's been 90% plus greed based. And it's not a reflection either about problems in the gold space and whatnot, because a lot of people are making the argument that cryptocurrencies are stealing demand from precious metals, and frankly, the monies that are piling into Bitcoin and other cryptocurrencies, at the margin, it does take away some of the flow, but it's not the primary reason why gold and silver have been lackadaisical in their trading. It's that they're down because they've been manipulated down.
Yeah. I want to ask you, Eric, it's something that we haven't ever talked about, and I've really never heard it even discussed as a possibility. When people talk about Bitcoin and protecting yourself from the financial system, and maybe it's just me, but I mean, the ultimate reason to own gold and silver is because it's insurance. You buy insurance before you need it, and it insures yourself. I mean, the system has a quadrillion dollars in derivatives that are all tied and linked together.
Yep.
And I mean, to me, if that blows one day, and I think it probably will one day, it might not be this year, it might not be next year, but I think eventually it's going to blow. And on that day that blows, and it blows down, it takes down the entire financial system. I might be wrong, but I don't think they're going to leave Bitcoin alone. I mean, you're talking about the contagion of what happens when the whole Western banking systems go down. I mean, the result of that is mind-boggling. I mean, you're going to have martial law all over the place.
And a monetary reset and a banking holiday and Bitcoin, like you're arguing, is not going to not be touched.
Yeah, it's not going to not be touched. And I mean, it's certainly, I don't think it'd be exaggerating that there's at least the potential that not only a banking holiday, but they're taking control of the internet entirely.
Yeah. And I've made the argument all along that when push comes to shove, and this also relates to the fact that Bitcoin and other cryptos are only 50 billion, so therefore the threat that they represent in the grand scheme of things, even though they've moved up a lot, is still contained. You know, if we do have that kind of crash and Bitcoin and others are at 200 billion, and they're sizable enough to the point where they can actually sop up liquidity and people run to it further, Bitcoin is only as good as being able to spend it. And the problem that people will experience with Bitcoin, if governments do choose to go and beat heads over it and clamp down on it, is that when it comes to the point of dealing with merchants that accept it as payment, the merchants can be leaned on by IRS regulations, by anti-fraud, anti-terrorism regulations, and the whole idea about how, you know, there's illicit activity in the cryptocurrencies market has been with us for years now, and that it's part, I mean, there has been cases where it has been used for criminal activities, but the powers that be love to spotlight that stuff because it puts arrows into their quiver for future use if they so elect to shoot at Bitcoin for those very reasons, to justify regulations that would make it an absolute nightmare for merchants to actually accept Bitcoin. Bitcoin is not off the grid. Gold and silver are. Gold and silver you can hold in your hand, and that is why, in fact, you know, it's a higher order of protection that the insurance of owning gold and silver can provide someone. Yeah, they can launch excess profit taxes. Yeah, it's possible gold and silver can face confiscation, possibly, but you know, the very few people in the United States own gold and silver outright, and if anything, we probably would only see excess profit taxes. So, I mean, the reality is that people need to be really diversified with the way they approach their insurance. You know, pay down debt, have cash on hand for really rough times. If the banking system were to have a calamitous kind of shutdown, cash on hand would be valuable. Precious metals in one's possession, as well as stored if possible, if you have the wealth to do that, and outside of the country. Some exposure to mining shares so as to benefit from scenarios like in the 1930s when they did in fact do a gold call. They tried to confiscate, but a lot of people still held their gold. Mining shares did well. I mean, in a condition of extreme uncertainty with the crazy markets that we have, diversification is a good thing, and buying when prices are being suppressed as they are is a gift.
Yeah, I certainly agree. And again, it doesn't mean that it might not be a good idea to hold a little bit, and certainly if you get out in time, it's great if you bought Bitcoin at $10, $11, $100, if you can get out in time, move that into physical.
Yeah, and I should say for the record too, I think that the cryptocurrency space in its entirety is going to go a lot higher from where we are now too. We're going to probably go down quite a bit because we went straight up and we have big corrections. We went. It was only, February when people were really excited about Bitcoin having parity and then crossed above the price of gold. And then all of a sudden China put in more onerous regulations to try to deal with what's going on with their capital flight situation in relation to what they've got going on with their shadow banking system just being unbelievably, they've issued like these investment products to the tune of $4 trillion US, and there's huge fraud there, and the amount of excess credit that came into the Chinese the economy in 2016 based on their shadow banking system was so vast, and when they started trying to deal with that problem and pull it in, and then also how the yuan currency had its natural pressure to devalue versus the dollar and other currencies as a result of all of the changes that China was doing with their liquidity. They had this, problem with Bitcoin. People all of a sudden started pouring into Bitcoin, and that was the reason why Bitcoin leaped over the price of gold back in the first quarter. And then China came in and made regulations such that it really harmed the Bitcoin market, and Bitcoin fell below $1,000. These kind of huge moves are par for the course, and we're going to see that kind of volatility when governments do try to make war on the Bitcoin and other cryptocurrencies.
And you have a little bit of impetus, too, of the Canadian housing market rolling over. Just everything that's happened in the last year with Canada trying to cool that down and put some regulations in place. That hot money is going to start flowing other places as well.
Yep, around the periphery of the core of the U.S. and European markets, and China to a lesser extent, we have shots across the bow. There was a bank that failed in Spain this week. The Australian real estate market is absolutely insane. Makes it, the antics that are going on in Canada look tame by comparison, and Canada is pretty ridiculous. These kind of excesses are the kind of things that become catalysts. And when you have a U.S. stock market that's ridiculously overvalued and the underpinnings for that valuation declining, lower profits as the economy rolls over, this is a recipe for disaster. When you mix into that the geopolitics picture and the domestic political front with anti-Trumpism and the possibility of impeachment, it's going to be a long, hot summer. I think in July 2nd, they're planning national protests as well, if memory serves, against Trump, and that's going to pretty much kick off the whole campaign of trying to escalate still further the war against Trump. And that's not a good thing for general confidence in the economy, and it's going to hit the dollar. I wouldn't be surprised if, early next year, we no longer are trading with a dollar DXY index in the 90s. We'll slip below that. As shocking as that might sound to people who only 6 months ago were thinking that the dollar was going to make a run over 110 on the DXY index. My, how things have changed.
All right. So on that note, have a good weekend.
Yeah. See you on July 2nd.
But yeah, we'll look forward to the next couple of weeks here. I agree with you, Eric. It certainly looks like gold and silver are head higher over the short to intermediate term. It'd be nice to see gold. I think it's really going to start to move once we take out 1,300, and I think it'll head towards those highs we saw in 2016. Silver, really the action begins once it can regain above $20. So once silver can get back above 20, and obviously there'll be some consolidation, some work to do around last year's highs, but once silver clears about $21.50, $22, there's really not much technical resistance up to $26 to $30 area. So
yeah, and another point too that we really should toss in here, because we haven't talked enough about this. We've mentioned it here and there. We have a silver supply deficit out of the mines coming on a forward basis, and it's quite substantial. We're going to see it this year. We're going to see it next year. And the reason why this is happening is because the price has been so suppressed for so long that miners are not able to produce profitably or have enough of a profit incentive dangling before companies to go out and do the exploration cycle to find more ore, to find more deposits. That combined with the fact that, existing deposits have lower grades, and that, the easy stuff to be mined is largely already been mined, et cetera, et cetera. Combine that with global economic activity turning down and silver being 65-70% based on the mining output from copper mines and other base metal operations, and you have a scenario where there's also going to be a supply crunch on top of just organic demand from financial markets, where investors suddenly say, hey, I want more exposure to something that'll give me a hedge against a financial system falling apart. So all these things are going to be fantastic for the price of precious metals, and this bull market's got a long way to go. We haven't yet to see the blow-off phase of a typical bull market, and that's coming.
Yeah, we definitely haven't even seen the start of phase 3, so got a lot of room to run to the upside. Hopefully here we're seeing the early stages. So we'll wrap up this week's show there. So for the Doc and Eric Dubin, thanks for tuning into this week's SD Weekly Metals and Markets.